Good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be starting afresh with a new indicator. We will be taking a look on the indicator named RVI, which stands for Relative Vigor Index. This is a momentum indicator and it gives us the idea of the momentum in the underlying instrument, whether the underlying instrument is trading bearish or bullish. We can determine using these indicator and also the strength of the momentum. So we will see how we can take the help of this indicator in defining a setup, algorithmic setup in a profitable manner. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. Here is this indicator block. We have to define these four input parameters depending on which we will be getting these two values, and also we have to pay attention to these settings. Coming to the input parameters, I had done a introductory session a long back, so if you want to go into the details of how this RVI indicator is calculated, I would suggest that you refer to that video. In this session, we will be more concerned with the functional aspects of these indicators rather than the technical aspects. So we will now take it from the point of view of how to use it. We have to define the time period for this candle, and using that it will be drawn on the chart. Shift value gives us the idea whether the value which are being derived are for the current period or for the historical period. So depending on your preference, you have to define this shift parameter, and for how many candle periods you want to calculate, you have to define it here. I will explain to you the logic of the algorithm on the chart. This is the Euro USD hourly chart, and here what we want to do is we want to go for the buy trade when we see that the momentum is bullish and it is starting in a new environment where it has consolidated, and now it looks likely that it might start to rise again, and the undertone is also on the bullish side. So to make sure that it is trading on the bullish side, as well as this is a new start, this is a fresh start, we are going to use a peculiar setup. Here we will use similar kind of formation where we have the recent crossover, not exactly in last hour or 2 hours back. We are not really concerned with that. Rather than that, we will take into consideration the 6 hour time interval. We need the RVI value to be above zero and also above signal line in the current hour, or you can even take last hour's output value, as that will be more stable. So let us consider last hour's output value, and this value should be above zero, and also, as I said, above the signal line. But 6 hours back the situation should have been different. We will need the RVI value 6 hours back to be below zero, and also it should have been below the signal line. That means that in last 6 hours the momentum has now shifted to the bullish side, and we have more chance of it being sustained for next few hours. So we will have higher probability of ending up in a profitable environment, in a profitable trade. And for sell trade, we will invert the conditions. We will need the RVI value to be below zero and also below the signal line in the last hour. But 6 hours back, it should have been different story. The RVI value should have been above zero and also above the signal line. So the crossover has happened recently, and also this dip below the important marker of zero should have happened recently. So that's what the key criterion is. And along with this, to make sure that there is enough of price momentum, we will take the help of the price action data, where we are going to consider the difference of last 4 hours, and we will consider the closing difference of last hourly candle and the hourly candle which closed 4 hours back. So we will have this interval, and there at least 20 pips difference should be there. Usually if we consider the Euro USD's ATR, it is around 4 sorry, not 4, it is around 50 pips for the day, and for 4 hours it is around 20 pips. So using that, we can set this condition that in 4 hours we should have set we should have seen at least 20 pips movement, and that will be indicative of the momentum being sustained on the same side. So we will use this criterion that along with this RVI formation, the difference between the last hourly candle and the hourly candle which closed 4 hours back should have been more than 20 pips. So if we are going for the buy trade, we will take the 20 pips as the difference on the higher side. If we are looking for the sell side trade, then we will consider the difference on the lower side. The last hourly close should be below the 4 hour back closing value by at least 20 pips. So that's how we are going to utilize this. Now let us head back to the Visual JForex board. First thing first, we will have to get the instrument subscription done. For that, the logical components are going to be required, which we can add from this menu. Okay, we will use on candle as the start point. Default variables, we have to add instrument, then match it with the candle instrument as we are using on candle as our start point. Candle instrument should match the instrument of choice, which is again Euro USD. And after this, next condition is going to be for position amount, all position should be equal to 0. Okay. As we are dealing with the hourly formation, I will change this to hourly. Okay. Shift value remains 0, or we can even change it to 1 as we will have more stable output. Okay. Candle period is hourly, and the number of candles which will be considered for calculation is going to be 10. So we leave it as it is, default value. Now to compare it to the output value 6 hours back, we are going to need one more of RVI block. So here I will take one more of the RVI block. This will be changed to hourly. Shift value will be changed to 6. Now, as I said, we are also relying on the historical data, historical price data. So for that, we are going to need info components. And for that, we are going to rely on this get historical candle. And I will change it to hourly again. Shift value will also be changed to 1. One more will be needed as we are going to take the interval between two historical candle with the time interval of 4 hours. So we will need to define one more get historical candle with shift value of 5. So 5 minus 1, the difference becomes 4. Okay. And to pinpoint the exact entry point, we will then use 10-second candles. 10 seconds. This will be changed to 10 seconds. Shift value is going to be 1 and 2 respectively. Okay. Now we have to define 20 pips. For that, mathematical components will be needed, calculation expression blocks. 20 pips. To define 20 pips, I will use default instrument pip size and multiply it with 20. For that, I will create new variable with the start value of 20. Okay. And this will become A1 into A2 as per the Excel convention. Okay. And here I will create another variable. So this variable will have the value of 20 pips. So we have these essential blocks in place, and as the time is running out, we will stop for the day, stop for the session here, and once we come back next time around, we will see how we can proceed forward with the formation to define the execution of the trade first for the buy side, and in the subsequent session we will also be talking about the execution for the sell trade. So that's it from my side for the day. Thank you all for joining in. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. Do reach out to us there. Thank you all. See you next time. Till then, goodbye.